And it's a beautiful Monday morning right here in Lagos, Nigeria. Good morning, good evening. Wherever in the world you're watching from, it's Business Morning live on Channels Television. I'm Ladi Williams. Happy Democracy Day. It was Democracy Day yesterday, and today is a public holiday. Celebrations continue, but the oil markets are still open globally, as oil prices slipped more than $2 today as a flare-up in COVID-19 cases in Beijing quelled hopes for rapid pickup in China's fuel demand, while worries about global inflation and economic growth further depressed the market. Brent crude futures fell $2.06 to about $119.95 a barrel in early trade, while U.S. West Texas Intermediate crude was at $118.54 a barrel. That's down about $2.13. Prices tumbled after Chinese officials warned of a ferocious COVID spread in the capital, announced plans to conduct mass testing in Beijing until Wednesday. Concerns about further interest rate hikes following a sharp rise in U.S. inflation data on Friday also weighing on global financial markets, and crypto market is not left out. All markets are rattled, at this point. We'll drill down on those markets later on the show. And back here, Lagos Chamber of Commerce and Industry says it's working with all relevant security operatives to ensure a hitch-free trade exhibition this year. This was made known by the chairman, Special Exhibition Committee, LCCI, Mr. Lea Kupolui, at a press conference in Lagos ahead of the Lagos International Trade Fair in November. So Kupolui stresses that the aim of the trade fair is to bring about economic integration. Do take a listen.
We are the only continent that refuse to trade with themselves. And when you look at the percentage of intra-African trade, it's so low. If I can speak, I don't want to put on too much statistics. I know it's below 20%. What we have done as trade fair, as Lagos International Trade Fair organizer, is to organize all these African countries on different levels, promote them, interaction in a single location. Our arrangement is beyond signing, far more than that. Because there are different levels of businesses in Africa, in Nigeria. If we don't bring these people together to work together, then the integration we are looking at will never happen. And I think that is our focus. And I can assure you this year, I think we have nearly about 13 African countries that's already bought into this idea to come to Nigeria.
And still in the news, with heightened political activities in the country, the Center for Promotion of Private Enterprises is drawing attention to some of the spillover effects on the economy. According to the CEO of CPP, Dr. Muda Yusuf, electioneering season unleashes liquidity, which has inflationary implications. Consequently, for investors, the level of uncertainty is generally higher in a season like this. It is much more difficult to plan for a long-term horizon because of the elevated political risk in the economy. Dr. Yusuf notes that electioneering and political activities also have implications for the level of bank deposits. With the increase in political spending, the banking system is likely to witness considerable withdrawals by the political actors to fund the elections. Most of these could be in cash. This may have an adverse effect on the level of deposit in the banking system and negatively impact the financial intermediation. And still talking about the impact of electioneering on the economy, we have Omoshiri Temichokpa, Investment Strategy Manager at AfriInvest Asset Management, joining us this morning. Great to have you on the show.
Thank you, Ladi, for having me.
So it's very obvious that we're getting closer to the climax of politics in the country with the conclusion of party primaries. The first half of the year was largely, inundated with political activities, from the core discussion on social media platforms to topmost concerns of investors about, the Nigerian economy. But the trajectory is likely to remain, since there's the second half of the year. Generally, do you think Nigerians and macroeconomic indicators are reacting differently from previous pre-election years?
All right, thank you once again for having me. I think it's actually a very good discussion that we have to bring to table what is happening in terms of macroeconomic reactions to, what's happened Q1, although, we are just at the year. So a number of, of factors have actually reacted. In fact, Nigerians are reacting significantly, plus macroeconomic indicators. In fact, Nigerians' reaction to the current, political atmosphere is largely hinged on, the deteriorating macroeconomic condition. And, these are quite obvious, what we are seeing around. For instance, you see that what happened recently when some youths, went to TBS, we had massive youth that wanted to get their PVC because most people are now politically conscious. And thanks to telecommunication, because before now, we couldn't see most of what is happening in terms of politics and in terms of information. But in fact, if a friend of mine told me that he had to follow, the primary elections of all these the top parties because it was aggressively discussed and clearly, discussed on social media. That had created a kind of awareness. And if you look at it from the angle of social media, that has actually helped to make more Nigeria more conscious of political activities. So I think that has helped a great deal, and people are actually reacting differently. And if you go by numbers, right, in 2018, right, we had, in terms of internet subscriber, we had just about 100 million people. But currently, internet subscriber in Nigeria are more than 147. And if you look at social media usage as well, from about 80 million in 2018, we have over 32 million right now. So those are quite important in the Nigeria political landscape. And I think it's actually shaping a lot. And there has been a lot of talk around the fact that even if you are agitative on social media, that you want good governance or you want this candidate to be voted in, and if you don't get your PVC, because elections are not conducted on social media, elections are not, votes cannot be, you cannot cast your vote on social media platform. I think all of those, talks have actually, affected how people see political activities. But I think what is even more important are two factors. One of them I've mentioned earlier, which has to do with the deteriorating macro condition. And the second has to do with the clamor for a bit of slowdown on the kind of gerontocracy that we have in Nigeria, in terms of the caliber of people. Gerontocracy has to do with having old people ruling set of people, that the average age, in fact, life expectancy rate in Nigeria is about 55 years, and you have a number of our leaders above, 55, some 70, and all of that. So I think the clamor for that has actually made people more politically conscious. And when you look at macro indicators, gone are the days when Nigerians are not concerned about macro indicators. What has happened, for instance, I could pick inflation. Before 2015, average inflation rate in terms of 10 years before 2015, right, or into 2015, it was just 10.7%. But if you pick from the most recent number, the 16.4, if you pick it 10 years till now, the average has moved up to 12.7%. Inflation has increased significantly. And when you look at exchange rate as well, is currently at the highest level ever. So all of this, are actually affecting people, and we are now becoming very conscious of political happenings. And if you look at unemployment number as well, the most recent number that we saw in 2020, unemployment rate is about 33%, compared to what we saw before 2015. The unemployment was barely above 10%. So these are concerns, and I think it's even more interesting now than ever, because technology has also helped people to understand what macro indicator means, how they can also affect their life. For instance, you see around that there are visualizations on inflation, visualization on government debt stock, visualization on what government used to service, debt in terms of the portion of revenue that goes into debt. So most Nigerians are now, aware of what is happening and the level of, the deteriorating macro condition. I think
Right.
importantly, I should also mention the what has happened to capital importation. It's quite clear that capital importation, foreign investors are also reacting to the current macro condition. At the last report, foreign capital importation was about 1.6 billion. That is significantly low. And if you extrapolate, you see that there's no respite inside. So it's quite clear that Nigerians are reacting to what is happening. They reacted in, first half of the year, and the reaction will continue going forward.
And Temitope, quite a number of headwinds, we're struggling with economically, at this point. But how much of a weight will this be on the next president?
So I think it's a whole lot of work, because factors or drivers of Nigerian economy, right, they are quite complex. The deterioration we have seen so far, so it's a whole lot of, for instance, if you look at government fiscal condition in terms of debt service to revenue ratio, right, is well over 80%. And if you look at debt stock to GDP ratio that helps to measure solvency, is inching towards the threshold of IMF of 55%. Currently, we are still between 35-40%. So it's inching towards that, which means there's a lot of a lot of concern and a lot of work for the next president. And in terms of infrastructure, insecurity, attitude, in fact, what is even affecting Nigeria beyond these quantitative factors, we also have qualitative factors, which include our culture, attitude, towards things, in terms of if we believe that the country will change, if we trust our leaders, because, trust, you cannot find a nation that can grow sustainably without trust. So I think the first port of call for the next president will be to build trust, to tell for Nigeria to believe that when my president says this, I should believe it, because if there are no trust, no matter how beautiful or laudable the policy and programs are, Nigerians will take it with a grain of salt. So I think from trust to infrastructural challenge and, other in terms of even international relations and even including youth into the system. So I think it's a whole lot of work.
Quite a lot of work.
They are not head shaking. I think they are surmountable, actually.
Surmountable, quite interesting. But we've seen some volatility in Nigeria's financial market, especially the positive momentum in the stock market. Is this market now immune to the uncertainties that normally come with pre-election years?
Well, I think in a way, going by the numbers, it's quite clear that the market seems to be immune to what we are seeing in the domestic market or the macroeconomic condition due to about three factors I'll mention. One of it has to do with the change in the structure of the markets. Two, has to do with factors that are driving individual stocks. And the third point has to do with the bandwagon effect. So I'll start with the structure of the market. You will observe that this year alone, the structure of the market has shifted from more of domestic players than foreign investors. Last year we saw about 72% in terms of, foreign investors participation in the market compared to domestic investors. And this year, in fact, in April, it was about 82% domestic investors compared to, foreign investors, even though it has average year-to-date performance in terms of domestic investors' participation in the equities market is about 82%, right? But the structure of the market is shifting drastically. And, in foreign investors are concerned about macro condition, and they have continued to shift away from the Nigerian market since 2019. So that's why it seems that the market is not responding to the worsening macro condition. And again, what is happening in the US. Look at the S&P, NASDAQ, Dow Jones Industrial Average. So a number of Nigerians that like foreign stocks, they might not want to go that route anymore for now, because stock prices are going down and interest rate is, it has been going up in the US. And if you listen to the Fed, it seems there's no respite in sight in terms of increase in policy rates. So because the structure of the market is changing, I think that has a role to play. And in terms of the structure of the market, again, it's also very important that I mention the top stocks, the top stocks in the market in terms of capitalization. You have Airtel, MTN, Dangote Cement. So these three companies alone account for 56% of the capitalization as at Friday. So it just tells you that whatever is happening in the market may not be a true reflection of the general market performance, because we have over 150 listed stocks on the Nigeria Stock Exchange. But just three stocks already account for 56%. So if you see significant gains in these stocks, it will tell you that the market is gaining, and it may be possible that others are not performing well, or they are just somewhat lackluster. For instance, so far this year, Airtel has done about over 80%. MTN has gone up by about 20%. Dangote Cement has gone up by about 7%. And we also have, so those are the structural factors. So when it comes to individual stocks, some factors are affecting individual stocks. One of them is the commodity space. If you look at Okomo Oil, Presco, they've gone up by over 50, 80% so far this year, and it's on the back of what happened in Indonesia when the government banned the export of palm oil. So that has continued to put pressure on on oil prices. And in fact, over 20 countries have placed one ban on the other on commodity exports. So that is affecting the commodity space, and because consumer or investors are expecting that increase in price will also affect revenue. They know that yes, it will affect revenue, so they are positioning in that stock. And if you also look at the oil sector stocks as well, Seplat, Seplat, in fact, the price is almost double so far this year because of the spike in oil prices. We are currently seeing Brent sitting above $100 per barrel comfortably now. So, and that was not that was not envisaged last year. So that is affecting the oil and gas or oil sector stocks. And when you look at the telecommunication sector, because of a level of progress, that has been made in terms of the PSB license of Airtel and MTN, that has, continued to put some form of interest in those stocks. And this year, the performance of those stocks are quite impressive. So when you look at these individual stocks, they are not really responding to macro condition because of their unique characteristics, because of factors that are affecting them individually. The last point has to do with the bandwagon effect, because these stocks are gaining, people are also looking at buying other stocks so as to benefit from the market rally.
Right. Well, that's also another huge impact there, the bandwagon, effect. And we've seen how, global markets are really down, at this point. Even in the crypto market, we see Bitcoin down a massive 12% this morning. So those markets are not looking attractive right now. But, let's look at the economic agenda of the major presidential aspirants. For instance, former Vice President Atiku Abubakar promised to allow, the private sector to thrive by breaking the monopoly of important sectors such as refineries, power, and rails, while the national leader of the APC and presidential candidate Bola Tinubu wants to create a new agricultural policy, intends to grow the economy by about 12% in the next 4 years. Do you think these agendas are realistic, in the light of the current global and domestic microeconomic conditions?
All right, thank you for that question. Well, I would say that, in terms of their agendas, right, is we know that we've seen series of something similar to these agendas in the past from the ERGP and all of that. So I think what is even more important has to do with the trust, right? Because if you ask an average Nigerian about the problems in Nigeria, they will tell you clearly, everybody knows the problem: infrastructure, insecurity, policy stability, ease of doing business. So all of these factors, they have to be considered. But I think the only interesting part about what the two contenders have laid on the table is that they will be pro-market, they will be pro-growth, and they will be private sector friendly. I think that is a convergence in that regard, and it's quite applaudable. But on the 12% growth, it seems overly optimistic, and I think my concern is that it's not broken down to facts and figures, looking at the component of GDP and looking at specific action plans to achieving this amidst the global outlook that economic recession is in the offing. Europe, they're looking at economic recession in the offing. The US is looking at a level of stagflation. So I think the 12% may look overly optimistic. I just want to believe that maybe the aspirant is setting a standard so that even if it's not achieved, but will set something quite high and see a way to hit it. But I think by and large, the most interesting part is the fact that these contenders are both market friendly and they are pro-growth.
Okay. All right, Moshe, you talk about investment strategy. So much to unpack there, but we'll keep tracking to see how all of this plays out. The investment strategy manager at AfriInvest Asset Management. It was great having you on the show this morning.
Thank you for having me, Ladi.
Thank you. So after the break, we'll look at Nigeria's real estate sector Q1 2022 performance. And as investors search for that sweet hedge against inflation, does real estate have a hedging ability? We'll have that conversation next. Do stay with us. This is Business Morning. Welcome back now to our next conversation. Analysis of the first quarter 2022 GDP revealed that the real estate sector sustained the upbeat mood in the last 5 quarters as it started the year 2022 positive, recording a 4.44% GDP growth in first quarter of 2022 and the highest growth since the fourth quarter of 2014. Well, rising inflation and tightening interest rates do impact the real estate sector. Let's talk to a good friend now, Bosun Babajide Okusaga, real estate expert right there, joining us from Lekki. Great to have you on the program.
Good morning.
Good morning. Great to have you. Looking at this Q1 data, how would you rate the performance of the construction sector? Despite the extremely low, purchasing power of Nigerian consumers, investment in real estate continue to grow.
We have been on this program and I've speak about real estate. What drives real estate is not only profit. There are a lot of other things that drive real estate, especially when other things are not working in Nigeria. For example, pride, popularity, and parent. As a young man, when you grow up, the first your parents will be telling you after your marriage is that when I go, you get your own house. So no matter what is happening in the economy, an average Nigerian will still want to get his own house. And don't forget that Nigeria, one of the essential things in life is shelter, apart from water and clothing. So people will still have to sleep somewhere and put their family somewhere. And don't forget also, lastly, that people always make sure they have their own house so that when they are hungry, people don't know. So these informal things are the things that are driving the real estate sector going up. And there's a lot of money that comes from the informal sector. One of the ways to measure the informal sector is how the increment and the appreciation of real estate. But most of these informal people in this one sector mostly invest in real estate. Majority of them are in dead asset, but they invest in real estate. So what drives real estate is not only for profit, but also for pride and popularity, and for parents, make sure that you are. So people keep on acquiring real estate for that reasons, and real estate is also, with this rising inflation, which is around 16.3 or 83 now. One of the best places you can hedge yourself against inflation is real estate. People have talked about gold, people have talked about the capital market. Gold hedge against inflation for a longer period, maybe centuries. Even when we talk about the capital market, Nigeria capital market is not complete. We don't have a proper derivative market. We did hear that the NGX said they're going to start the derivative market. As second quarter, third quarter, we are believing that.
Yeah, we're still looking out for that one.
So that we will not be investing and hedging against a risk in capital market. We pray about with the real estate market in Nigeria, the capital gain is fantastic. People need to stay somewhere. So rental income is consistent. So that's why you see that there's always increase.
There's still action in that sector. Well, but the war in Ukraine seems to be affecting, everything. There are indications that, this conflict could affect a global real estate market. Is Nigeria insulated from this?
You see, I think the Ukraine-Russia war is overhyped. And I think we are getting affected by the international media because a lot of us are watching too many shares. But something that is affecting our real estate market, particularly to Nigeria, but nobody is doing anything about it. Nobody even knows. People are not recognizing. You see, the same thing, what is happening in Ukraine is what is happening with Yemen, with UAE and Saudi bombing them. People find alternative That same thing that's happening with Israel and Palestine. People will find an alternative. But there's one, and that's a topic for another day, another topic entirely. But what's affecting us is that a lot of young people, first home buyers, that same closing cost that they have used as down payment for their real estate and to get mortgage are using that down payment to travel abroad. So there's a lot of relocation happening, massive relocation of young people in between between 25 and 40. These are the first home buyers. These are the people that really take mortgage. They've been working for a while, so they build years of experience and they're thinking, let me leverage on my cash flow. But these people are borrowing money for the purpose of relocating. Now, a lot of companies have declared their competitors, not other companies, but other countries that are taking their staff. So this really caused a reduction in acquisition of real estate. So first home buyers, so now the industry are left for investors or second time, third time home buyers that know that there's return, and also insurance investors. But these people come in and they make real estate affordable. For most of them, what they'll be buying, they may not be able to stay in it, but they want to acquire real estate. Don't forget the parent effect that I mentioned earlier. So this market, this is peculiar to Nigeria, and these young guys are moving on a massive scale. So now our first home buyers within the age of 25 and 40 have dropped as high as 65 to 70%. That is the real thing that is affecting us that we should bother about, not Ukraine war or any war that is happening in Afghanistan or in Yemen. That is our own war. A lot of young guys are relocating and using the same down payment to travel abroad. But this process is now becoming expensive, and they are really investing in it. So that is what we should do more research on and bother and try and see how can we reverse that.
Well, that's quite a big investment, I must say. But right now, with rising global inflation and, central bankers looking to tighten lending rates, I'm wondering how you builders are going to manage with rising rates at this point.
You see, the inflation does not always affect real estate that much, because that was make people invest in real estate. So if you look at the GDP, if you look at when the GDP was even in negative, the real estate sector still had a steady rise, followed also closely by the construction, because most of this money comes from the informal sector. If you go to the Lekki area of Lagos now, because of the potential of the Lekki Free Trade Zone and Dangote Refinery, there's a lot of building coming up, and these are not from insurance investors. These are coming from the informal sector. The same guys that I do motor traders are now turned to developers, and they are building massively. But there's no infrastructure to support this thing. Those are the things that we should bother about. You see now, going on the Lekki axis, there's a lot of buildings springing up. Don't forget that same thing that happened in Apapa because of the ports. A lot of building went there, a lot of people went there to build. It became luxury, but now it's become a nightmare because it's only one road in and one road out. Separately, the Fort William Bridge has been affected and had a lot of setback. So with the massive development going on in that area, infrastructure is not following it. President Buhari has done a lot of things in the state corridor and saying that he will do a lot of road on tax credit. Yes, fine. And what that Abiodun has done with Obafemi Awodiyi local government and the express road is helping. But the problem is not about inflation for real estate. It may affect other areas. But the problem is that we should get infrastructure and we should work on our effects. Majority of what we're using to construct are imported. So this is what will affect the real estate industry. If we can have a stable FX market, whereby, for example, we start the building with the exchange rate of 300, 350, 400. By the time you are completing the building in 18 months, we are talking about around 600, 620, 605. How do you bargain
about 100% increase
now,
there.
so how do you hedge against those FX risks?
Right. Well, that FX is a major issue when it comes to building. But I saw a report recently highlighted that commercial office development pipeline remains active with about 63% of projects under construction. But despite these additions to the Lagos office market, there are still high vacancy rates, estimated about 12 to 36% in grade A and B offices. What does this tell us?
Okay. Let me quickly give you a background. You see, everywhere in Nigeria, really, land always appreciates, everywhere. But you see, because of land grabbers, for example, in 2017, the first 9 months, they have over 1,200 cases in Nigerian court against land grabbers. So that majorly underscore land as an investment instrument. Now, so most of the investments are in developed properties. And these things, most of them happen in Lagos, Abuja, and Port Harcourt. And that constitutes like almost 65% of the investment in developed properties. And most of them are strictly residential. But some few years ago, some people came up with different ideas about commercial real estate and this. I've always told people, what drives real estate investment in Nigeria is residential, and even most part of the world. Single home residential investment will always drive real estate. And that's why if you look at the latest report of Northcourt, they were saying that people are doing grade A offices going for grade B plus, and even residential converted to offices. If you look at the trend, look at what apart from the Lagos Island business, all those areas are empty. What's happening to them? We can see that steady rise of offices moving to Victoria Island, making the commercial business treaty. That's simply happening to Lekki Phase 1. It's almost a 50-50 commercial real estate, if not more than that. So this will always drive real estate. So I always tell people, yes, commercial investment is good, but there will always be vacancy. Especially with the working from home now, what is really driving the commercial area is much more of the industrial, whereby people are looking for warehouses and distribution points because of e-commerce. But these days, a lot of people are working from home, flexible working hours, policies is not making the need for commercial office space. Now there are a lot of virtual offices that are in place. So people are not investing in that. So for startups and for even existing business. So you see more vacancies. But because these people that invested are institutional investors and they are very few, so and they are willing to pull out now. So a lot of Nigerian businesses are buying them over, taking position, because I believe it has the potential. But if I go with your penny advice, always stick in Nigeria. Stick to your residential development. Residential development drives commercial, which is not like that in other part of the world. A commercial comes in, there's a commercial activity, they now drive the residential. But because government does not invest in infrastructure, a lot of roads in Osaka Agugi were done by individual developers. So you see that these residential developers are the ones that do the infrastructure, then commercial activity comes in there.
Quite interesting. Quite interesting. And, talking about residential now, as vacancy rates remain high, attracting and retaining tenants will remain a key priority, to landlords because incomes are being squeezed, at this point. What are the options, available here to keep your house actually tenanted and keep that money rolling in?
There are two feedback you get from an armchair analyst and for people like us that are on the field, feet on the ground. So on the surface, it looks like vacancy, but not really. It's what they call housing mismatch. People are building what people are not looking for. People are building area people are not interested in renting. And also the political and economic financial crime scrutiny has also affected some areas. So where you see there will be houses and occupation has reduced, and there's a lot of scrutiny in where your funds are coming from. So it's more like a mismatch. And also lastly, the increase. That's where the Ukraine war comes in. The increase in the in diesel price, which is caused by the increase in the cost of crude in the international market. It's I think a lot of facility managers are going through hell right now, making sure that they are profitable and their occupants are comfortable. So the first thing is their kind of properties people are looking for. More people are trying to, as I told you, a lot of young men are traveling, so they're looking at the 1-bedroom, 2-bedroom apartment, 3-bedroom apartment, thereabouts. Also, people are looking to buy land or residential building in gated community because of security, and that is what's also driving the Abuja market right now, because they can see that it's structured and it's safe.
Okay. All right, so much to unpack there, Babajide Okusaga, real estate expert. But we'll keep tracking that market, to see how it grows. We had a report recently that that sector is used for a lot of money laundering. But yeah, that's a story for another day. But thank you so much for coming on the program, Babajide Okusaga, real estate expert. It was great having you.
Thank you very much. It's a pleasure.
All right. So now let's take a look at what's happening in the markets. We have Ini John Mekwa right there with Friday's closing. Great to have you, Ini.
Thank you so much, Laddie. Good morning and welcome to the market segment. Well, it's a public holiday here in Nigeria. That means that the markets are not open, but We'll give you a review. We'll do the equities today and do the other markets tomorrow and see how the equities did last week. Well, last week, it was just one positive trade, but that one positive trade actually covered the whole week because the week ended with the all-share index in the green. Last week, it was up more than 0.5%, 0.55%, and we're still retaining that 53,000 level of the all-share. The equities is 28.681 trillion naira. So we can say that it's a bullish sentiment. A lot of analysts have said that. I spoke to a couple of them last week, and they did insist that it's still a bullish sentiment in the market, even though the market was down. Then we did see some of those days when the market was down, when the all-share index closed in the red, it was very marginal, 0.06, 0.04, and things like that. And then I'm going to see the activity chart now, mostly in the red compared to the week before. Volume was really close to 2 billion, but 1.83 did not really hit that 2 billion. Value 19.49 billion naira, and deals for the week total 21,723. This is much lower than what happened the previous week. Well, some economists are saying that it seems that the market is beginning to feel what's going on in the political scene. I know Laddie had that discussion earlier about the impact of electioneering activities on the market and finances and liquidities. Perhaps there are some people who are selling off some of their shares, to put it in the election. But I don't know. Who am I? I'm just saying what economists are saying. And then we look at the sectors now. The banking really got a lot of attraction last week. We saw a lot of profit taking from the banking there. But I think we have Rotimi Fakayejo, who's a stockbroker now. He has more first-hand information from the market. Good morning, Mr. Fakayejo. Thank you so much. Happy Democracy
Day. Morning,
Happy Democracy Day.
Happy Democracy Day.
So, I mean, you guys, the analysts, have insisted that it's still a bull run in the equities markets in Nigeria, even though we do see from the U.S. and even in Asia, we see the markets are in the red. Is it still a bull run in equities in Nigeria and the NGX?
Well, it's still very much so because if you look at the year-to-date position of the market, it's still a whopping 24.88%. And I think it is most likely the best performing market in the world as of now. And so much as well that we have our own peculiarity with respect to a lot of things. Inflation has been around us for a very long time. They are just witnessing it in a great dimension in the Western world.
So we are used to inflation, Mr. Fakayejo. Is that what you're saying? We are used to inflation. I mean, we see the U.S. inflation heading to the double digits. So we're already used to the double digit inflation. So we cannot be moved. Is that what you're saying?
It's already home with us. So we've planned ahead with that, and we do quite a lot well with it. And also, if you look at all the sectors within the market, I think it's the banking sector stocks that have not really done fantastically well. And we want to hope that things will definitely take a better turn for them. It's done just about 2.8% this year to date, whereas in the oil and gas sector, we've seen an improvement of as much as 60%. So I believe very much that this will still continue until we begin to see the figures for the Q2, which is half year. And that time, we may begin to see a new dimension. That may trend till about close to September, at the time where we'll be drawing close to the election period, and when electoral activities will have been on a very, very high pace. So I believe strongly that the bull run we are seeing right now is still very much in place. Investors can still take a lot of advantage, and stocks that went down, the likes of Presco and Okomo Oil, I think they are likely to pick up back, and likewise MTN. We can see a wide variance between MTN and Airtel prices, but though the gap may not close, we're going to see quite a good improvement in the share price of MTN. So all these will add more value to the market, and maybe by the time the results come out, you may see the All-Share Index soaring as high as 26 to 30%. And I believe it may sort of, to a great extent, be the highest we may see for the year.
Yeah, you did mention one of the current conversations with economists at this time, as we see more activities in the political scene. Some economists are worried that it will also affect liquidity for investments. So for instance, we may see more profit taking in the market as individuals seek to get funds to the political scene. How much of a worry should this be, or do you see this, for investors and for the markets?
Well, significantly, I think I did mention earlier that maybe prior to the beginning of, to the end of third quarter, we begin to see that effect. And one thing that is good for the market is the general performance of the market may not really be much affected, because the banking sector stocks, where most investors put their money, have not really experienced a significant upward trend for the year. And I did mention earlier that it's done just about 2% or thereabout for the year. So even if we are seeing more pounding or more influx of shares into that particular sector for sale, we may not really see as much impact on the All-Share Index. So I believe all in all, even if people are going to sell more of their banking sector stocks, the likes of Access, Zenith, GTCO, and First Bank, I think we may not really see much impact on the All-Share Index. So the performance of the market will still remain top, as we are seeing right now, at least by the time we get close to end of September. So when electoral activities will now begin to take its toll on the entire economy, where the uncertainties will begin to step in. So as at that time, we will see a lull in the equity market, and at the same time, the prices may begin to wane at that time.
Rotimi Fakayejo, stockbroker, thank you so much for that analysis. I will certainly be following the political activities and see how it affects the market. Enjoy the holiday.
Thank you.
So, Ladi, there you have it.
Yep.
Your politicking is affecting our market.
Exactly.
But Mr. Fakayejo noted that it seems that this has already been priced into the market here in Nigeria.
Well, we'll see how the
it's
market,
not new for us.
Yeah, we'll see how the market plays out. Thank you so much, Eni. All right, now let's quickly head on to the UK. Now we have Juliana standing by right there. Great to have you, Juliana. So GDP declined by 0.3% in April, adding to the 0.1 drop we saw in March. I guess this was expected, Juliana.
Good morning, Ladi. It actually wasn't expected, even though, of course, all of the gloomy data that we've been receiving in the UK for the past couple of weeks, you'd expect that economists would have predicted this. But they actually expected in April an expansion of 0.1%. That's not been the case, as you quite rightly said. This is the second month in the row that GDP has declined, 0.3% in April, according to the Office for National Statistics. There was a contraction across all major private sector industries, which include includes manufacturing, construction, and of course the all-important services industry. Services contributes about 80% to the UK economy. So anytime that falls, it has a knock-on effect of everything. I think a lot of commentators this morning have cited the lack of test and trace. We know that the NHS and other private individuals were able to make billions of the test and trace system. That's all been scrapped, and there was a significant drop for that. Also in manufacturing, lots of businesses working within the sector have been complaining about high energy prices. This is affecting businesses as well as people in their homes, and supply chain disruptions. We've had this China zero COVID policy, and that's really had a knock-on effect, especially because there was still a backlog from the pandemic. So it's not great. The Chancellor has been speaking this morning. He says it's not acute to Britain, that this is a global issue. But because of the OECD update we had last week, as well as the British Chamber of Commerce showing that stagnation is likely to affect Britain next year, it does appear that these shortcomings are not going to be in the short run, but more in the long run.
Yeah, that dreaded word, stagflation, being thrown around at this point. All right, Juliana, you talk to Ini later at 1:30 for more updates from London. Thank you so much for coming on.
Thank you.
All right, now let's take a look at other markets. Now we see price of Bitcoin being hammered this morning. We see the market cap trading at $1.02 trillion. It's down 6.88%. We're seeing that $1 trillion mark trying to lose that level in the crypto market. Volume traded 23.51%. We see the price of Bitcoin this morning, $25,000, 233. That's down 8%. At this hour, it's trading even lower than that. It's volume traded $46.68 billion. We see if the bulls can defend this level right now. We see the Bitcoin price fail to clear that 30,000 resistance zone last week, and we saw a bloody weekend right here in the crypto market. Look at Ethereum there now, trading at $1,319, down 9.54% this morning. It's a bloodbath we're seeing in the crypto space right here this morning. And we see the top also market cap is all red, double-digit losses from Cardano, BNB down 7%, eCash also down 3.83%, and XRP losing that 40-cent mark, down 6.89%. Let's bring in Amari Sachet now, talk about other matters happening in the crypto space. Great to have you, Amari.
Great to be here.
So now there's a lot happening in the crypto space. We're seeing Bitcoin lose some critical support this morning. And there's also talk about a cryptocurrency lending firm, Celsius Network, pausing withdrawals and transfers between accounts due to extreme market conditions. What's going on?
Well, what's going on is that Celsius is insolvent, right? They don't have the money that they claim to have. And so they cannot pay back the people, right? And as a result, people need to manage their loss and they need to sell other assets. And this is why we see a big sell-off of Bitcoin. We see a lot of firms in the crypto market that operate in a way that is, not honest, like they are effectively frauds. They don't have the money that they claim to have. And as the bear market continues, they cannot support, all the games that allow them to keep going, right? Like when the bear market is here, you need to have real money to fund your business. And those companies, they don't have it. And as one goes down, we saw Luna going down a couple of weeks ago. Then the bear market gets worse. And no, this is Celsius. And we can see already there is USDT, the stablecoin from the Tron blockchain that is not looking so good. Justin sent us to inject 700 million, I think, to try to support the peg, and the peg is still not, is still not solid. So USDT is probably going to go down in the next few weeks as well. We can look at the fact that, Ethereum is used as a collateral in many of those protocols. If it goes down in the, 1200 zone or below, it means that we need at least 900 million USD to back those different protocols for them to be solvent, and this money is probably not going to be there. So we should expect more of that going on.
Right.
Effectively, like the bear market is there to clean the products that are not serious.
I guess it's called the cleansing, at this point, Amari.
Exactly.
But do you see more pain in this market, looking into your crystal ball?
Yes, because I still see, projects like USDT that are not solid, but they are still going, right? And so it's unlikely that the market is going to do very good until all those sectors are cleaned out. But this is also a huge opportunity, right? When the market is low is when you can look for good projects that have good fundamentals and invest in them, right? So there are like the good old dog, like Bitcoins that have been there for a long time. It's a good opportunity to get them for cheap. You have like newer projects like eCash that we're running that are also not dependent on all those platforms and therefore are going to be there for the next bull market.
Quite interesting. And, looking at the market right now, every investor is looking for a hedge, at this point. And I think Bitcoin should shine, at this point, since, inflation is the major topic globally. But it doesn't seem to be giving that sweet inflation hedge with the price volatility we're seeing.
It's probably going to take few months for the situations to stabilize, I'd say, because there have been like what we call in economics malinvestment. It's like investment that have been put in projects that are not solid, and those projects are collapsing now. And the unfortunate effect of that is that people, they need to sell other assets that are not bad assets, but they need to sell other assets to cover their loss, right? So if you have some Bitcoin and some eCash and you had as well some Celsius, know that Celsius is collapsing. You need to sell some Bitcoin and some eCash to cover your loss, right? So the price of everything tends to go down in those kind of events. But, when blood is in the street, this is when you need to buy. So this is when the good opportunity to buy are like during this summer, find the good project that have good fundamentals. And an advice on how to do that is like, look over the past 6 months. Who told you to buy Celsius? Who told you to buy Luna? Who told you to buy all those stuff, right? Those people, they cannot be trusted. They are trying to, get you to buy tokens that are
all
worthless
the influencers,
so that they can sell it to you and get the money, right? So,
right. All right.
Get back
we'll
over
keep,
the past 6 months, see what people said, and evaluate based on that. And the people that told you, well, those projects are dangerous, see what they were telling you 6 months ago, and those are probably solid projects.
Right. I guess a lot of fact checking that needs to be done, at this point. But
Yes.
some traders will say they don't have, or they're too poor to buy the dip at this point. But we'll keep watching this market. Thank you so much, Amari Sachet, eCash creator. It was great having you. All right. Now, looking at the top alts by market cap, we see it's all red, double-digit losses across the crypto market, and that $1 trillion spot market is still being watched at this point. Well, that's the program today. Thank you so much for watching. Don't forget to join us by 1:30 on Business Incorporated for more updates and developments in the world of business. I'm Ladi Williams. Thank you for watching.